All right, time to welcome our market guest then. Our Sreesankar joins in from Prabhudas, Lilladher. Sreesankar, hi, good morning. It's lifetime highs for the market, and we've seen, big gains in the mid-cap space as well. Where do you think is valuation comfort now for this market, have valuations ceased to matter in the near term?
I think in a bull market will always tend to see the valuations moving into a new high, and as the market's an all-time high, you will invariably see the markets or the valuations reaching into a new high. I think you need to take the clock back probably 5 years back more than 5 years, 6 years back. 2008 Jan, the whole market was trading at 25 times forward earnings. I'm not saying that 25 times forward earnings is justified. I'm just giving you an example out there. It was a bull market. Globally, everything was on a roll. So you had the global markets on a rally. And so has been the case with the Indian market. Here also, we have seen the one, if you look at the whole market forward multiple, what has been the 10-year average? We are above the 10-year average right now. I think the 10-year average was somewhere around 14.9 or something. We are already crossing 60. So that's the way the markets behave.
Hi, Sreesankar. Thanks so much for joining in. What's the call on oil marketing companies? They've been clearly the best performers to date. BPCL has actually doubled in 2014. But, yesterday we got that excise duty. And even if crude continues to fall, with diesel being deregulated, it's not that they're going to be, big beneficiaries of any, crude price fall. So what's the approach on oil marketing companies from here on? And will they, just move in line with the market? Will they be underperformers from here on?
So let's look into the entire conundrum of this oil marketing company. Oil marketing companies have got an issue. For me, most of the companies in the regulated space, that one really is not able to predict the profitability of these companies because of the element of under recoveries and subsidies coming in. Now, even assuming that the companies get the subsidies, subsidy will be paid to them, there is an element of working capital getting involved in it. And how these companies fund the working capital with increased borrowings, I don't think the government pays them for the interest cost on these borrowings as well. So now the question is, why these stocks were, you're right, these stocks have performed very well. Why it was not performing earlier? Because there was a huge element of under recovery. The fall in crude oil prices has reduced a lot of those under recoveries, and that has made the earnings in a much more visible manner. The key takeaway for me is, yes, they are good because under recoveries are no more there, but it will remain more of a trading nature. People will buy into these stocks when they expect the crude to move down, or probably the under recoveries not to be there. And once these stocks go into a higher valuation, I don't know, unless a clear-cut guidelines come out and people are confident that you are not going to have these companies suffering from under recoveries to a great extent, I don't think it will become a structurally long-term holding in most portfolios. It will remain trading stocks.
Okay, so Sreesankar, what about banks which have led the market? Clearly both PSU and private banks have done well. From here on, would you still buy these stocks? And if yes, what would be your preference, both in the PSU set and in private set?
Okay, let's look into the entire financial services sector per se, and then break it up into the two parts, PSU and the private sector banks. A growing economy invariably will result in the financial services sector doing extremely well. And anticipating that, you've actually seen a rally happening in the entire banking space for the growth in the economy story. The growth in the economy also brings about two things. You're expecting to see some of the stressed industries probably getting out of their stress and coming back into the performing industries space, which should actually result in the banks generally seeing a reduction in their restructured portfolio, and also some of the NPAs coming back into performing accounts, which will invariably remove some kind of a stress on the banks. And that's theory. Now, the second part is it really happening in the Indian context right now? We are all had expected a lot of stress to get removed probably by the second quarter of this fiscal. It has not happened. Looks like it may extend for another 2 quarters before things starts happening in the entire banking space, in the financial services space. We also believe that as we have got a new government in place. The winter session is coming, will be starting now, and you actually have much more of decision making happening and policy decisions gets implemented. You will expect to see growth coming back into the economy per se. That's when probably the stress in the banking sector will reduce. The third part is lower inflation. What has actually resulted in this? The deposit growth has been strong. At the same time, the advances growth has been probably the lowest in the last 6 years, etc. So now, if you see that the deposit growth being there and advances not being there, the only choice for banks is to drop the deposit rates. And you've actually seen the banks across seeing an expansion in margins in the current quarter. The other important factor is look at the 10-year bond yields. Every one of these banks also has got a huge amount of investment in government security. Roughly, given the CRR, the SLR that they have to maintain, we can assume that the 10-year G6, which used to be what, a 9.1% in somewhere in April, are today at 8.2. The fall in this yield is also going to give a lot of gains to it. Now, looking at it from the asset quality perspective, private sector relatively continues to have a better asset quality than the public sector. Public sector still continues to disappoint. But public sector banks are also doing very well. From my point of view, it's on the expectation that the growth in economy continues there.
Okay. Very quickly, both Sun Pharma and Cipla disappointed the street with its earnings at least a bit. Would you recommend a buy with the dip that we've seen?
See, we have a buy on the stock, Cipla as well, but the time horizon will be longer term for both these companies.
Okay.
Okay, Sreesankar, in the mid-cap basket, what would be your top 3 or 4 ideas?
We continue to like in the mid-caps, Britannia, if you call it as a mid-cap, but it has done phenomenally well. What we need to revisit that stock price because the stock appreciation has been quite huge over the last 2 months. Because our analyst continues to believe that longer-term story remains intact, but the recent outperformance needs to have a look. Today is the results, if I'm not mistaken. Then you have again banks like Federal Bank, etc., where we continue to be optimistic on these stories.
Okay, Sreesankar, we'll leave it at that. Thanks so much for joining in with your thoughts on the markets as well as various sectors. Remember, you can watch this entire conversation.
Muted growth on a sequential